Welcome back. We're at the low point of the day and we're at a very, very crucial juncture. 18,020, 18,030. You don't want this level to break decisively because then, in fact, you get into a bit of a tricky zone. Remember, positioning for the expiry is such that you're counting on the 18,020 odd level holding out. So let's see whether or not the bulls throw in the towel or there is some support that comes in at these levels. But getting to our next management then, PNB Housing Finance. It posted a mixed set of numbers in the past quarter. The assets under management, they continue to decline and now down for the 12th straight quarter. But there has been a sharp rise in the margins to around 4.7%. And the asset quality as well did improve this time around. That explains why the stock is doing a relative outperformance. It's up close to around 0.5%. But to understand the way ahead, we are joined by Mr. Girish Kousgi, the MD and CEO at the company. Hi, sir. Good morning. Thanks so much for joining in. Well, disbursements were quite good, right, for the past quarter. But that's not translated into AUM growth. Could you tell us why is the rundown so high? And also give us a guidance on the AUM growth for the next couple of years. That's for FY23 as well as for FY24. Go ahead.
Good morning, Nigel. I think if you look at the book growth, there has been book growth in last quarter. I think if you see on a YOY, we've grown by 7%. So last quarter, I had indicated that this year we will close book growth with close to 10%, maybe 9 or 10%. So there is book growth, and we have seen good traction, on disbursements in last 2 months. And if we talk about next year, in terms of disbursement, we will be able to grow at about 22 to 25%. And in terms of book growth, it will be about 17%. So I think the trend should continue for next few years, as I had mentioned in the last time. And if you look at on the collections, I think a lot of work has happened, and therefore you will see that GNP has come down, at a company level, both on retail, and also to a certain extent on corporate. And if you talk about book retention, it has been a very good story. It has been a very good story that we were able to retain customers in last quarter.
Mr. Kousgi, hi, good morning. Could you talk to us a little bit about cost of funds? Because across banks, that is the story which is playing out. I mean, we just had the management of SBI cards, of course, very different business as compared to yours. But how do you see the progression of cost of funds from here for you? Where does it stand at? And how is that likely to impact, margins for you?
So today, if you look at cost of fund at a portfolio level, it's about 7.55%. I think incrementally it is slightly higher. And we know that the interest rate cycle has almost nearing its peak. So having said that, I think in the entire banking system, there is a bit of concern on liquidity. So I think that pressure would always be there. But I think from PNB housing point of view, we are very, very clear in terms of margins, and we will try to moderate yield depending on cost of funds and the margin. So I think this is something which was there in the past, which is there now, which will also continue in future, whether it is an interest rate rising scenario or interest rate falling scenario.
What does that mean in terms of specific numbers, though, Mr. Kousgi? If you can leave us with some sense of what the numbers would look like
in terms
margins?
Of? Okay, so I think as a long-term steady-state business, I had mentioned about 3.2 as NIM and 2.2 as spread. Of course, today, if you look at NIM is more than 4.5% and the spread is about 3.8. So, maybe if you look at the next few quarters, it might be in that range. But I think on a long-term basis, because we are into housing, I think for a company like PNB Housing, a NIM of over 3% and spread of about, let's say, 2.2, 2.5 should be ideal. I know today we are on the higher side, but yes, we want to operate at these levels going forward. Of course, if you have an opportunity, always it will be higher. But on a long state, I think this is what is the guidance.
Okay, well, that's very strong. The disbursal growth that you spoke about, 22 to 25% for FY24. I wanted to understand a little bit in the different segments that you operate, whether it's salaried, self-employed, corporates. Where are you seeing maximum amount of growth potential? And if you can just break it up for us, because in the quarter gone by, your salaried segment rose almost 14%. Can you tell us a little more?
I think that is more by design, Sonia, because we want to increase the profile mix towards salaried, which is because that is, I think that portfolio behaves very well vis-a-vis compared to self-employed. And in terms of product, we want to be highly skewed towards home vis-a-vis compared to non-home. So it is more by design. We've just started this journey. Going forward, we want to see salaried segment increasing to up to, let's say, 65 to 68%, and the rest by ACP and ACNP. In terms of product, our focus is going to be on home loan, which will be, I think, ideal is about 70%, and probably 30% could be non-home.
Okay, got that. But despite a very strong disbursal growth and very aggressive targets, your AUM growth is not happening. That's something that's been lagging a bit. Why is that? And what would the AUM growth target be for the full year FY24?
If you look at the entire retail and corporate, corporate we are degrowing because we are not doing incremental business, and it is a degrowing book. And the focus is now on retail. Now retail constitutes 92% of the entire portfolio. As I had mentioned, corporate, we want to work on recoveries, bring down delinquency to a reasonable level before we could restart. We will restart, but it might take about, let's say now about 5 to 7 quarters. Right. So till that time, corporate book is degrowing, and therefore you will see that at a overall enterprise level, the book growth is at 7%. If you look at last quarter, it was negative, but this quarter it is flat. If I have to compare it sequentially, on a YOY we have grown by 7%, right? So this is on book. So this year we will close, book growth close to 10%, and from next year it will be about 17%. Largely, the story is going to be on retail because now we are focusing on prime. We have kick-started affordable vertical, in last week of December. So we will see some traction in Q4 of this year. And next year, I think it will be a great story to add to our growth trajectory.
All right, Mr. Kousgi, affordable housing is another segment that you're focusing quite a lot on. How much does it contribute, say, to your disbursals as of now? And where do you see this contribution headed?
So I think probably 1 year from now, we are looking at incremental 25% to come in from affordable vertical.
And what is it currently at?
We just started now. It's hardly about 2 weeks. So we just started. We'll see traction, from coming quarter onwards.
Okay, all right. Mr. Kousgi, thanks a lot for joining in and giving us a perspective. So that's a 20 to 25% disbursal growth that they're looking at for FY24. But let's move on. Sona BLW Precision Forgings posted a strong set of Q3 earnings. The revenue, EBITDA, profits have all come in at the highest ever level. Another positive, the company's order book has increased to 23,800 crores with 2 new electric vehicle program wins in the third quarter. Vivek Vikram Singh, the MD and Group CEO of Sona BLW, joins us now to talk about that. Vivek, thanks a lot for joining in. First, I want to understand